Hi, my name is Alex Carlucci with Gus & Cho Associates. I want to talk to you about the 401k, using those assets for down payment money, closing costs, and all sorts of other things. So you can definitely use your 401k. So let's say you have $50,000 in your 401k, and your down payment's $10,000, your closing costs are $7,000, so that's $17,000. And you're like, I don't want to take it out of my 401k, but you can do a thing called borrowing from your 401k. So what that means is you borrow that $17,000, and it stays there in your 401k. You're just borrowing from yourself, and you pay yourself back interest. So over maybe a 2-year period, you have a payment plan with that $17K paying yourself back to your 401k, so your 401k doesn't lose that money for your retirement. And the underwriters don't hit you for debt to income ratio on that. That's the wonderful thing about 401ks, is using your money when you borrow from your 401k, is you pay a monthly payment back to yourself, and it doesn't count as a car payment or a debt against you. So that's one thing. You can also withdraw it. So because of COVID right now, these 401k companies are allowing you to withdraw it without the penalty, because they're only for a purchase of a house. So they're going to want to see the contract. So you can also withdraw it and not pay it back and lose that money for your retirement and call it a day and not have to pay that monthly fee back. So if you don't want to have that monthly fee, I recommend you withdraw it. So you also can take the money out right now for the 401k and pay off debts to qualify. So you can use it for down payment, you can use it for closing costs, and you can pay off some debts if you need to qualify. So if your DTI is too high and you want to buy your DTI down, you can pay off your car payment, not a car, but let's say you pay off your credit card. Let's say you got $15,000 in credit card debt, that's $500 a month. You take 15 extra out of the 401k and you pay your credit cards down, and now you qualify. So you can use it for multiple things for purchasing a house, either down payment, closing costs, pay off debt, and you can either A, you can borrow it, or B, you can withdraw it. So I recommend borrowing it because it's hard to get that money replenished back. You should put yourself in that spot to replenish that 401k, because that's the best way to save long term. I mean, there's better ways to save, but people aren't disciplined enough, so let someone else take your money and just invest it and leave it there and forget about it. So now, when you use your 401k, there's a process. So I want to let you know you have to provide your most recent quarterly. So every 401k is January to March 31st. So January 1st to March 31st, and then April, May, June. So April 1st to June 30th, and then July 1st till September 30th, and then October till December 30th. So that's how a 401ks, they come in 4 quarterly statements. So right now it's July. We would ask for March to June 30th, or April 1st to June 30th 401k, that quarterly statement. And we need all pages, not a snapshot, not a picture, not a summary, but the actual 401k quarterly statement that they send to you. Or if they don't send it to you more, it's paperless, you go online and print it off. We also need the terms of withdrawal. That's a little more complicated. Hit Control G or Control F when you're on the page and type in terms of withdrawal, and it should take you to a standardized page of terms of withdrawal. Terms of withdrawal is not the terms you're going to have to withdraw your loan, but the basic terms of withdrawal for any person who's going to sign up with this company and get a 401k plan. So it's not about your terms of withdrawal, it's about general terms. And the terms usually say when you turn 59 and a half, there's no penalties, you do pay taxes on it, but blah, blah, blah. So that's the terms of withdrawal. So quarterly statement, all pages, terms of withdrawal. And then when you would go to withdraw the money, they're going to want a copy of a check or that wire that goes into your bank. So they're going to want that copy of the check or wire that goes in your bank. They're going to want a bank statement showing the deposit went in there. And they're going to want a paper trail of all that. So the worst part is that they want an activity statement on your 401k showing that it actually left your account and what your new balance is, so they can add it up and make sure it actually left your account. So they want to know for sure that where it came from and it's gone, and where it landed and it's definitely in your account. It's kind of tedious, but that's the process for the 401k. A lot of people have to call their 401k companies and talk to them to help them get all these documents. It's kind of complicated, but it's a great way to get into a house. A lot of people are using it. Now, another thing you can use your 401k for is reserves. So let's say you're buying investment properties, you're buying multi-units, or the file doesn't like you without reserves, or you can't get approved eligible on the computer without reserves. You get to use your 401k as reserves. So you don't get to use all of it because they assume the penalties, or they assume the tax liability, and use 60 or 70% of it, and that counts as reserves for you, or assets. So it's also good to have your 401k. So if you've got one, give it to your mortgage broker. If it gets to ask, say, hey, I got a 401k, does that help? And he'd be like, oh yes, for sure. Even though you're not going to withdraw it and go through that whole process, it's there as an asset, and it'll help your approvability. Make the underwriter a little nicer to you. So you got 100 grand in 401k, and your credit score is a little low. They're a little nicer because you've got reserves. You're not going to let your house go because a couple mortgage payments, a loss of job for a couple months. You're going to save your house any way you can. You've got some money reserved that you need to go to save your house. So that's why they like reserves. So if you got any questions on this, we do these things all the time, coach you through the whole process of 401k, but yes, you can use your 401k to buy a house. Please give me a call if you have any questions anytime at 630-915-7550, and please subscribe.